Very warm welcome to everyone present here today. In this episode of Mojonomics, Chief Investment Officer Mr. Sunil Damania will discuss the overall performance of India Inc. and its implications for financial year 23. Towards the end, we'll also be having a QnA session. You can drop in any queries you have in the chat box below. Over to you, Mr. Sunil.
Hey, thanks a lot, Jason, and very warm welcome all of you. Don't get carried away by our red screen on the behind. It's nothing to depict the market condition. It is just that Mojonomics has, this is the color scheme. So you would see this red even in good day and during the bad days also. So, it's a very classical dilemma for the December 2023 numbers, 22 numbers. Is the glass half empty or is the glass half full? And some people will say these numbers are extremely good. Some number of people are say it is not so great. So then where do we stand? We need to really get a clarity whether the numbers are great or not. So what I'm going to do, I'm going to make a 55-page presentation to all of you, looking into what has actually really happened for the December numbers. Not only that, you remember I did make some prediction when I presented September numbers, that what we should expect for the December numbers. So we'll revisit that. And in this presentation also, I'm going to make a prediction, what should we expect for the March 2023 numbers. So very quickly, Jason, can we play that clip if you don't mind?
Ready shortly, sir.
Sorry?
The clip will be ready shortly.
It's not ready yet? Okay. So if you remember, I did make a prediction that India Inc. numbers for December 2022 will see a single-digit growth in terms of net profit. And exactly that is what has happened. Of course, I had predicted 7 to 9% growth.
Can you play the videos?
Yeah, can we? Please do that. Yeah. And overall, I expect India Inc. to report on Y the single-digit growth. So anywhere between 7 to 9% kind of a net profit growth we should expect for India Inc. on Y. And as you can see, I'll show what has happened. Actually, it has happened in single-digit only. But only thing, I had predicted 7 to 9%. It is less than 5%. So I has made by this one, and purely because of some of the sectors really come out with a very poor set of numbers, which I had not envisaged. But anyway, it's a single-digit growth. So again, something on similar line, I'll also make an attempt for the March 2023 quarter also. So very quickly, disclaimer: this webinar is only for an education purpose. Whenever you invest in the equity market, it does carry a little higher amount of risk, and past performance should not be considered as an indicator for future returns. So let's rewind what we discussed. We clearly realize that whenever there is a high price, a lot of people had bought inventory in high price, and the price of that raw material started declining. They did not get the benefit of that. Why? Because they had higher price raw material which has not been consumed, and they started to. I had predicted in Q3 the high price inventory would be phased out, and hence business should be able to reap benefits of lower input cost. And I think most of the sectors have benefited from the lower input cost. And due to that, I also predicted that many companies' margin will improve. And if you can see, the margin did improve. Am I right? And I'll come to that. Our margin is quite significantly improved. I think it was near about 20%, which is increased to 22% or something for the India Inc. So lower raw material prices, input cost, price hike did really help India Inc. to report a better. But I had predicted that banks will have a lower loan growth in December as compared to September. So to be very frank with you, I did not get the data on the September, what was the growth and what is for December. December I did get a growth and almost everyone has reported. So I had predicted lower loan growth And if you look at most of the banks have reported single digit loan growth, highest being the EU Small Finance Bank, which was near about, which was near about 8% or so, and HDFC Bank on 1.8%. So we have seen some kind of a moderation happening in the loan growth book. And my sense is that we could further see that happening in the March quarter too. Remember, in 2023, banks have underperformed very significantly. I had predicted steel and non-ferrous will continue to report poor financial, and that's what exactly has happened. Tata Steel reported losses, also mainly because of its European operations, and each and every non-ferrous metal company reported very weak set of numbers. I had predicted paint industry top line growth should moderate, and that's exactly what has happened. If you look at the top line growth, it's 1.5% quarter on quarter, and Y-on-Y it's only 3.5%. I was expecting very poor performance for the cement company. That did not happen. In fact, that's where my prediction went wrong. Cement company reported growth in quarter on quarter, but Y-on-Y there has been a substantial decline in their net profit. Substantial decline. Okay, but anyway, I will not take credit. Why? Because I was expecting the numbers to be very poor even quarter on quarter. So that's not what happened. FMCG companies had suggested margin expansion, but top line would be muted, and that's exactly what has happened. FMCG company reported lower quarter on quarter growth, but operating profit is higher as compared to September. Mainly because of the input cost that they got the benefit. Auto companies did well. They are feeling that the effects of high interest rate and dwindling pent-up demand, that did not happen. I must tell you, this is where I've gone wrong actually. Okay. In fact, there was no impact of the higher rate of interest on the auto company sales. So I think that's where I've gone wrong. But real estate companies could struggle to report, and I think the top line increased, but operating and net profit declined for the real estate sector. And in some of the places, even real estate companies have admitted that the sales have really been muted. Of course, it's a little mixed bag kind of stuff. On one hand, certain pockets within India is doing extremely well, certain pockets have not done well. And for the same company, the different pockets have given different kind of, like if you happen to listen to Oberoi con call, there's one project which is in Worli, very close to my house, 360, they are not able to sell even a single flat in that building. And there is one project called Ilsin or something, if I'm pronouncing correct, they could able to sell only one flat in the one quarter. So that's kind of a stuff. So the supplies has increased, demand seems to be moderating. That's what the sense we are getting. And real estate as a sector has not done so well in 2023. I had predicted, which you just happened to see the video, India Inc reported 4.7% net profit growth Y-on-Y. We had predicted 7.9. So even though my prediction came true, but the number I predicted, I think it's was a little on a higher side. I was expecting 7 to 9%, but profit growth is only 4.7%. So you need to give that this one. Now let's look at what our IP is saying. So overall, 35.8% of the company reported positive growth as compared to 38.5. So in that sense, the growth has, the positive trend has declined as compared to September. So that's a fact. Unfortunately, the negative also increased 24% against compared to 22, which is not a very good sign. And when I further bifurcate, the trend has been almost similar for across the board. Large cap, something similar, decline, if you can see this, and this is increase, which is not a good sign. Something similar for mid cap, this is decline, and this is basically also decline. So this is a good sign for mid cap. Okay. But small cap, this is increase and this is decline. So overall picture does not look as healthy as it was there in the September 2022. But is it a down and out scenario? The answer is no. Why? Because India Inc reported 1.3% growth in quarter on quarter on sales and 11.8% in net profit. And when I compare Y-on-Y, 4.7 in bottom line and 17.4%. So I think the lower input cost and price hike taken by the India Inc. did really help. Volume growth has been a little subdued. Okay, and I'll come to that in my later part of our presentation. How do I see March 2023 number? The moment you remove banks and NBFCs, you can see the decline of 9.7% Y on Y, but 8.4% growth on quarter. The reason I've removed banks and NBFCs is just to understand whether, see, logically one should not buy, because even if you look at Nifty and Sensex, they do have a larger weightage. But sometimes you people will cover what has happened. So I've removed banks and NBFCs, I've removed steel and non-ferrous, but retained banking, then you can see the growth. Now, the reason I did that, because both, this metal businesses, they're basically bulky profits happens or bulky losses happens, because this is more of a seasonal business, more of a cycle. And that does disrupt the overall picture. So I thought, let me remove this to understand where do we stand. And there you can see the growth has been really good. But this does include banks. But if I remove banks and NBFC and still non-ferrous metal, then profit growth Y on Y is 0.5% and 8.8. So it doesn't go to negative. Am I right? So overall, the number doesn't look so bad to me. Of course, I see this as a glass half full. Someone may say this glass is a half empty. Both are right, but that's the way your perspective is. Another picture we have always seen oil marketing company, and historically oil marketing company has been a company that would always feel the burden from the government policy action. Sometimes they will not be allowed to recover the full petrol and diesel prices and so on and so forth. Am I right? And sometimes they were very lumpy profit or lumpy losses. So even if you remove that OMC, I think India Inc. did it very well. 6.9% growth quarter on quarter, 9.4% in terms of Y on Y. So overall picture doesn't look very bad. How did the top business houses, and this is we done in terms of the market cap. Adani, which was number 1 last time, has come down to number 5th now in terms of market cap, and we all know why. And Adani and Ambani are the only two groups which has seen top line growth quarter on quarter declining, even though their net profit did move up quarter on quarter. But in terms of net profit Y on Y, Tata Group saw a decline, Ambani Group, that is Reliance Group, saw the decline, and Bharti did see decline. Bharti is more to do with the Indus Tower. So this is the kind of a performance by India's top business houses. And if I have to divide this into public and private sector, it seems public sector did better in terms of Y on Y. When it comes to quarter on quarter, the private sector seems to have done well. Can you see this? So that's what the data. Let's look at sector insight, whether this growth that we are talking about, is it well spread or it's been driven by few sectors. And this is my favorite slide. If I have to really look at the quality of growth, I would always put this sector and the net profit on the company level, and at the sector level inside and the company level inside. And what I realize is that while the more sector reported growth in terms of top line and bottom line, that is not so case with the company level. That I'll come to this point. So thus gives the overall most of the sectors done well as compared to the sector that did not well. So that's a very good thing. Which are the sector that report highest profit? And banks and NBFCs is a big chunk. And hence I'm afraid not to take out that numbers from the India Inc. numbers. I always thought, like, some people do believe that banks and NBFCs to be removed. But look at the quantum of profit they make. Out of top 3, top 2 are by banks and finance. And look at the quantum of profit, 70,000 crore. And IT software, which is a non-finance sector, is only 31,000 crore, so double level. So you can imagine the quantum of growth, the banks and NBFCs, and hence it's unfair to remove them from the India Inc. numbers. And this is which are the top most profitable sector, and what is the quarter on quarter change that we have seen. Insurance decline, power and generation decline, and pharmaceutical decline. In terms of quarter on quarter growth, these are the sectors that did extremely well. This is a negative net profit, telecom and equipment, engineering, e-commerce. E-commerce seems to be struggling, quick service restaurant, and so on and so forth. This is a percentage change. Again, I'm not going to spend a lot of time on this. Now let's look at the private sector bank, how they did well. The reason I'm covering this because you people have a lot of excitement about the private sector bank. 10.7% growth quarter on quarter, 31.5% growth Y on Y. But if you look at the YTD returns of Bank Nifty is -6. So sometimes you do see that kind of a disconnect in numbers अच्छे है, लेकिन stock market performance अच्छा नहीं है. And the reason could be market is trying to discount something in future, which may suggest that numbers may not be so good going forward. This for the private sector bank, this is for the public sector bank. 13% decline, but 13% growth, 60% growth in terms of quarter on quarter and Y on Y net profit. Auto and auto ancillary marginally up despite they came out with a very good set of numbers. Can you see that? And FMCG 2.5 and 25%, only hardly 1%. Now FMCG also getting benefit of moving to the safety. That's another benefit they got it. But if you look at the top line, I think the volume seems to be the one big dragger for the FMCG sector. Why? Because rural economy continues to be. So almost 35% of the FMCG revenue comes from the rural India. And that's where the challenge continues to be there, because the demand is still not there. People are doing down trading, people are doing downsizing, and this is really impacting the top line growth. Of course, the input cost pressure is easing. That's really helped them to improve the profit, and so is the case operating profit as well as the net profit. Consumer durable, challenging scenario. If you remember, I had suggested that also, and I do expect them to continue to struggle even in the March quarter. But the numbers looks pretty bad. If you remember, I had predicted that. Still, quarter on quarter, or Y on Y, 85% decline. And I keep saying we should always remove commodity business because it does have a lumpy growth or lumpy degrowth. And that makes completely Indian picture looks little blurred or looks little bad. So I always suggest that doesn't give the quality of earnings growth. So that's why I always look at sector, spread, how many are growing, degrowing in terms of top line, bottom line, and at the company level. So just to get an idea whether growth or degrowth, is it lumpy or not? Because that will give you a quality. So we should always start looking at the quality, and I'm the person who would give a lot of importance not to the quantity but to the quality. And this is the way I look at the numbers to understand the quality of growth within India Inc. Pharma has underperformed very significantly, but I must tell you green shoots are happening, and I'll come and later part of my presentation to give you some idea about what has happened. But of course, decline both quarter on quarter and Y on Y in terms of net profit. IT has been a star performer of 2023 despite such a volatility of 4%, 7.9% growth quarter on quarter, which is a very good, and 11.2. And this is the sector where people have been talking about gloom and doom. So sometimes you need to take some commentary from the experts with the pinch of salt. This is for cement, while the Y on Y declined 40%, quarter on quarter is 300% growth. Of this also because of low basic pay. Most of the banks have improved their NPA level, like Kotak Mahindra Bank, Federal Bank, AU Small Finance, IDFC Bank, First Bank, Punjab National Bank, and Bank of Baroda. Others have almost retained the same net NPA level of as compared to previous quarter. Net NPA should always look at quarter on quarter, never be known Y on Y. Am I right? Something this is for this. And for PSU Bank, every bank has improved their bank has improved their net NPA level as compared to the September. So that's a very good, happy scenario. NIM improved, which was, my sense was that NIM will not improve, but that improved. And if you look at the quarter on quarter, almost each and every bank has seen that NIM has been improved. So that's a very good scenario, except Bandhan Bank. I think everyone has been able. This is a 30 bips point, that 30 bips, but if it was 1%, it's 1.3. That's the way one should look at it. Am I right? Company level insight, on sector level insight, we saw the growth has been well spread. Am I right? Here, that's not the case. Here, the reason is that more companies degrew, both in terms of sales and in terms of, it should be net profit. I think there's an error. Should be net profit. So please read this as a net profit. I think there's a mistake there. Both in terms of what we call sales as well as net profit, net quarter on quarter, net, Y on Y, the more companies showed degrowth as compared to the September 2022 number or December 2021 number. So that does gives a little, this one, it's not a very happy sign. So while the sector-wise, the picture looks a little better, doesn't look so great in terms of the company level wise. These are some of the most profitable company in case if you wish to know. Reliance is number 1, number 2 is State Bank of India. I'm not very sure how long it can remain there. HDFC Bank, or HDFC Bank profit will go up once HDFC get merged. Okay, so that numbers will go up, and then maybe it could be the most profitable company or the in the country, depending upon what happens to the Reliance Industries Limited. ONGC, again, the crude oil prices have started going up, so that should benefit. But we will wait and watch. See, remember the average crude oil price, the Indian basket is lower as compared to what it was there for October to December quarter. I did that analysis. Unfortunately, I'm not having that writing pad with me, but I did that analysis which tells me that for October to December, the average crude basket was near about $86 per barrel. I think it has come down to $82 per barrel for Jan and Feb. March is just started, so let's not talk about that. But I've been informed that now further it has gone up to $89 or something. So this is what the most profitable ITC does comes in the one of the most profitable company in the country. Well, you don't see Hindustan Unilever in this, but Nifty 50, they did extremely well, must tell you that. They are the flag bearer for India, 13.8% growth quarter on quarter and 7.7% growth in terms of bottom line. So what I predicted for India Inc. did come for the Nifty 50 companies. These are some of the companies that did extremely well within the Nifty 50, and these are the companies that did not do well quarter on quarter in Nifty 50 companies. I'm not going to spend much time. This is for Nifty 200, 4.8, which is very similar to the India Inc. numbers. So Nifty 200 companies would account for almost 90% of the India's market cap, almost, I think so. And this is what it says basically. Very good growth. These are some of the best performers, and these are some of the, I've removed the worst performer just for the, now there is one worry, which is making me a little worry. I'll be very frank with you, is the interest cost. And I've excluded banks and finance. Why it makes me worry, if you look at the quantum of growth, quarter on quarter has increased to 10.4. That's in double digits. See, all this time, it was still in the single digit. Now it's increasing, and I think that's a one danger sign that we need to be mentally be ready about it. And hence, those companies which are highly leveraged will have a higher probability of underperforming. So what you should be doing, you should be staying away from the highly leveraged company or the group, because they will face a lot of pressure on the higher to serve that interest cost little higher, because and even RBI is not going to stop with his last, maybe in April it will further hike the rate of interest, and that's going to put more burden on the people, those who are highly leveraged. So that's one sign, and that's also reflecting, no, I think, oh, there is something, some slide seems to have gone away. I had also put the operating cost to interest cost, but I think my analyst seems to have made a mistake. That is also increased. So whatever you're earning, almost 20% of that earnings are going to just to repay the interest cost. And that trend is increasing, which is not a very happy sign. And that's also a sign of danger. So I must tell you, all this time I was not a little worried about the rate of interest going up. It thus gives me impression now it started impacting the India Inc. profitability. So unless EBITDA margin goes up, it would become difficult for the companies to serve that borrowing cost in a very meaningful manner. So be careful with that kind of stuff. Depreciation cost, the reason I wanted to show you this, just to get an idea whether capex cycle is bigger or not. And unfortunately, I must tell you, it has not, because you don't see much substantial, it's only 4.6%. But that we have seen in March also 4.7. So I don't know whether capex cycle is, looking at the data depreciation cost, it doesn't give an impression that the capex cycle has come back. At least not till the December. We need to wait and watch what happens in the subsequent quarters. So what are the major key takeaways? Okay, one is that India Inc performed in expected line with no major negative surprise. In fact, not a single company has suggested gloom and doom kind of scenario. Interest rate has started impacting India Inc. It's pinching now, and interest cost to EBITDA is also inching up. This could create a problem. Benefit of softer commodity prices have started reflecting in the margins of the company, which is a good sign. And slowing global growth had an impact on the export. So those are some of the companies, I'm not talking about the service sector, but some of those who are merchandise exports, they did see their numbers taking a beating. Both private and public sector perform well as the NPA numbers have improved significantly. But CASA growth, deposit growth has become a challenge. And I think that's one thing which is going to impact the NIM of the banks and NBFC going forward. So CASA deposit is one product which helps banks to report smarter growth, because they become rich by your money. Because in CASA deposits, on current account you don't earn any income, any interest income. And in CASA, in that savings, you get only 4% only. So it does take away, and they lend you at 8% and 9%. The NIM goes up, and that's where the cream comes for the banks. So the moment CASA deposits goes away or gets reduced, it impacts my cost of borrowing, and that basically going to impact the NIMs going forward. While FMCG companies have witnessed ease on input cost, and that really helped them, rural demand continues to remain a challenge for them. And their commentary also suggests so something similar for the consumer durable companies also. IT firm attrition rate has peaked, that's what we predicted also, and we should expect further improvement in the subsequent quarters for the attrition rate. I think there are the pressure which was IT companies were facing seems to be easing very fast. Cement sector did improve, a blended realization improved by 2%, but it does give a feeling that going forward, realization are not going to be so robust. That's what the sense I am getting it. I think the one big surprise in the subsequent quarters, and that is my personal prediction, is the pharma sector. Why I'm saying so? Because pharma sector is showing some kind of a improvement both in the US and the Indian market. Generic prices have started stabilizing, and revenue from US has started increasing due to the new launches being done in the US market. So I think the pharma, which has underperformed very significantly, there seems to be some green shoots are happening within the pharma companies. If you happen to listen to the commentary, they did give this. Post-result commentary from Indian countries remain very, very optimistic. No one is talking about gloom and doom scenario. And another good thing is that none of the big fund houses have reduced India's Nifty 50 numbers post-December numbers. In other words, the growth story continues to be there. That's what the key takeaways from this. So what should we expect now for the March 2023 quarter? This is my personal opinion. Net profit growth should remain under pressure for India Inc. Why? Because of higher rate of interest and softer demand from the international market. So I think these are the two factors that India Inc has to, headwinds that India Inc has to face. And I think that would create some amount of net profit growth will remain a little subdued. Benefit of lower crude prices should reflect in the margins, but that would get offset by the lower demand and higher interest cost. So while you do have a lever of lower crude oil prices, but that will get offset by the lower demand in the economy and higher borrowing cost. CASA deposit is going to make life little difficult for the banks, and then NIM will come under pressure. That's what my prediction. Steel and non-ferrous will have a tough time. Why? Because the China opening up still not reflecting in the prices of aluminum, copper or steel prices. And hence the prices are continuously remain low, and that will reflect in the March quarter. So while the outlook looks promising post-March, but the number that they are going to declare is not going to so great. there is a overall trend. If you remember that I mentioned about the paint company, there is a overall trend. I'm getting a sense now that demand is slowing down for the house improvement companies. That includes paint, consumer durable. That is, I'm talking about small home appliances or kitchen appliances which are used in the kitchen, tiles, wood-based product. I think they should report lower net profit for the quarter ended March. Of course, the tile companies will get benefit of lower gas prices, but somewhere the demand outlooks remain little soft, and hence things look, so they may have be forced to pass on that input cost, benefit on the lower input cost to the end consumers. And chemical company will report lower top line as well as bottom line quarter on quarter. I'm again repeating quarter on quarter. So be careful with the chemical companies. Demand outlook does not look very rosy for the chemical companies. FMCG companies will continue to struggle, report volume growth, as my sense is that rural demand is still not come back the way it should come back. And with heat wave and lower rabi crop, I think the situation is unlikely to improve for the month of March. While my last time prediction did not come true, but I continue to believe that higher interest costs should pinch auto companies as well as real estate companies. If you look at, while the Y-on-Y data looks very promising for the auto companies, month-on-month data doesn't look very promising. And based on this, my sense is that overall India would report quarter-on-quarter net profit only in the single digits. That's what my sense is though. So last time also I predicted single digit quarter-on-quarter. That was Y-on-Y. Sorry, I stand corrected. That was Y-on-Y last time. This time I'm predicting March 2023 numbers will have a single digit net profit growth over December 2022 numbers. With this, just this last slide and then let's open the floor. 2 years for 26,999, but you get additional 3 months. So in other words, you pay for 2 years, you get 27 months, which works out to 1,000 rupees per annum, per month, which works out to near about 30 rupees per day or so for the Markets Mojo subscription. And our new launch that we did, mutual fund transaction, is a part of this. I'll request my colleague Jason to please put that, and let's open the floor for question. You must congratulate me, Jason, because 55 slides I could complete in 36 minutes.
36 minutes, yes. I'll start off with this first question. This is by Mr. Amputamkar. In result corner on Markets Mojo website, total 1,269 numbers of companies show good results out of 3,548, which is 35%. Out of these, only 102 have come with outstanding results. Do you think 102 outstanding numbers is a good number, or what's your opinion about these figures?
So, sir, you don't have to look at outstanding. So we also look at the trend, whether the trend has remained positive. So you may be outstanding last time and this time also you are outstanding. Or you were positive, very positive and outstanding. There is a growth. So I think we need to also look at the trend, and that's exactly what I did in my first slide, where I shown you how the trend has improved. On the contrary, the trend has not improved for the positive result. Why? Because in December we have lower percentage of company which are showing positive result as compared to September. This is my slide that I am referring to, sir. And hence, the numbers are not so. And even if you look at the number of companies reporting net profit growth quarter and quarter, and this one has, this is what I was thinking overall. Can you just again take this? 38.5% of the companies reported positive results in September, which decreased to 35.8 only. So there is a little decrease, and that's how we should look at it. You should look at the trend rather than look at it in isolation.
Okay, this next question. This is actually a suggestion by Madhav. If all the webinars could begin with a very brief commentary on your perception of the market movement of the day.
Sir, with daily, in fact, to be very frank with you, I think market down tha, am I right, Jason? Down with tha, because I distinctly recall. That's why I also said in the beginning that market ka sentiment down tha. Sir, why do you want daily? Daily ka kya karoge? Samajh mein batao. Kabhi khushi, kabhi gum. That's not. You don't come to the equity market with daily returns. Am I right? You are not a trader. I again maintain India. So even though my commentary, if you got the message loud and clear, we are not expecting very robust growth for March 2023 quarter. But yet I'm extremely bullish on the market. Why? Because my view is little long term. So daily commentary दूंगा sir. मेरे लिए काम बढ़ जाएगा नंबर वन. नंबर टू, आई डोंट स्पेंड टाइम ऑल्सो टू लुक एट व्हाट हैज हैपेंड टू द मार्केट. मेरे को उतना वो एक्साइटमेंट रखता भी नहीं है कि मार्केट इज वो. आई बीन इन्फॉर्म टुडे, इनफैक्ट आई हैपन टू रीड ऑन सोशल मीडिया, आई डोंट नो हाउ फार इट इज ग्रेट, that FIs have bought very heavily today. Jason, can you just confirm that too, if you don't mind?
Yes, we actually also got a statement by Mr. Gadina. He said that you said that FIs would buy, and today they've bought actually a high number of shares actually.
कितना अमाउंट है कुछ बता सकते हो? Because I think I happened to read somewhere on social media, someone just informed me FIs, and yet the market went down today. Am I right? तो सर वो डेली का मत रखो, कुछ मतलब नहीं है उसका. मुझे भी थोड़ा एक्साइटेड नहीं होता. आई डोंट थिंक मेनी पीपल वुड बी एक्साइटेड. लुक एट, is my view has changed in the market? I think that was more important. And my view has not changed. So daily market में कोई मतलब नहीं है. वो कभी ऊपर है कभी नीचे. You can't take your investment decision based on this, am I right? Yes, you can take your trading decision based on that, but not the investment.
Okay, moving on to this next question. This is by Durgesh. Considering the high rate of interest, should we prefer companies with zero debt or low debt?
Sorry, still coming. Considering the high interest rate, should we prefer companies with the zero? Of course, sir. If you ask me, see, one of the reasons, if you remember in 2023, January 2023, we suggested IT companies. Why? Borrowing cost ही नहीं है उसमें. When there is a concern about the corporate governance, these are one of the finely managed companies. FMCG companies should do well because उनके पास borrowings नहीं है. कभी कभी तो उनका नेगेटिव वर्किंग कैपिटल रहता है. तो आई एग्री विथ यू दुर्गेश जी. प्लीज यूज दैट एज ऑल्सो ए यार्डस्टिक टू डू दैट. बट ऑफकोर्स देखना पड़ेगा कि उस बिजनेस में ग्रोथ है क्या नहीं है.
Okay, this next particular question, this is by Pankaj. Sunil ji, when performance of companies goes down, it will also have an impact on IT companies as they would reduce their IT spends in the short run. What's your view given that IT companies are showing red slips to their employees even in India?
So, Pankaj ji, I think in India, the revenue of Indian IT companies is not function of what happening in India. It's a function of what is happening in the US. And as you all know that there was a fear of recession happening in US. That's not going to happen. The economy is showing a lot of resilience. And due to that, people are now talking about 50 bips rate hike in the next Fed policy rather than 25 bips rate hike. And people are saying there will be more rate hikes from this one. So people were previously talking about hard landing. No one talks about hard landing of the US economy. Now people are talking about soft landing or no landing at all. If that is going to be the case, I don't see much of a problem with the Indian IT companies. And of course, they're asking, remember, the complete equation undergone change in 12 months. पहले एम्प्लॉय वे कमांडिंग डिमांड कर रहे थे. एक जॉब हाथ में था, बोलता ये जॉब का सैलरी मैच करते हो तो मैं रहता हूँ, ना तो मैं चला जाता हूँ. एंड कंपनी वे फोर्स टू डू दैट, रिटेन करना था. अब द इक्वेशन हैज गॉन इन द फेवर ऑफ कंपनी नाउ. दे आर इन मोर कमांडिंग पोजिशन एज कम्पेयर टू द एम्प्लॉय. सो इट्स अ गुड फॉर देम, नॉट बैड फॉर द IT कंपनीज. एम आई राइट? So that now, remember the real estate. If you remember, I did one webinar in 31st March 2022 last year, and I had predicted if those employee who are in IT, they are in a much commanding position in terms of asking for the negotiating the salary, and that is also spurring the growth of the real estate, especially in the city like Bangalore, Hyderabad, Pune, and so on and so forth. Now, when this situation turn, I think it will also be counterproductive for the real estate companies. Why? Because the demand that used to come from the IT employee is going to get reduced. So, my sense is that the fallout of this softer scenario for the IT employees, the casualty would be indirectly to the real estate companies.
Okay, as per NSE data, FI's buying value today was 20,596 crores, while they sold 7,800, registering an inflow of a breathtaking 12,770 crores today.
12,000 crore, are you right? Are you sure?
Yeah. Even a lot of investors have written in the chat box 12,772 crores, and as per data, most of them are bulk deals into Adani stocks as well.
Oh, okay, that's because of Adani Group. Okay, okay. Because 12,000 crore looks very big number. But I'll take this data with a pinch of salt. So let me tell you very frank with you. It looks very impressive, but 12,000 crore is a very big number. Very, very big number.
Okay, I'll move to this next question. This is by Mr. Alan Matthias. Dear Sunilji, paper stocks, is the story over in that?
We don't think so. I know you people are a little concerned about paper stocks. We do own paper stocks, and our IP continues to make us believe there is nothing to be worry at all about this one. Jason, where did you get this data from here? 1 minute. I'm just looking at the NSDL website. Let me see if I'm making some mistake or what. Latest, let me see. Today is 2nd March, am I right? Today is the 2nd March. So stock exchange 7,000 crore, gross sales 773 crore. No, I don't know where. Jason, can you show my screen or I'm making mistake?
It's currently not visible, sir.
Oh God. Okay, I think there's some problem. Okay, okay. I think it's 700 crore only. That's what I'm getting is from the NSDL website. I may be wrong. So I don't know where did you get. But of course, someone also I happened to see somewhere in social media also very big number. If it's 12,000 crore, I think it's good, but I'll always take it with a pinch of salt.
Okay, this next question by Mahesh. I've invested HUL with huge capital. Should I exit completely or should I wait for the market to rebound?
Wait, Mahesh, wait.
Okay, question by Investor Bees. Mrs. Bectors has already given me nearly 25% return. Should I hold or book profit?
So did we send you the advice for this one? Answer is no, am I right? Now if you're holding in your personal category, our sense is please continue to hold because we are not exited. It's continue to remain a mojo stock. So my advice would be don't lock in profits. See, the complete biscuit business, they are mainly into biscuits and bread actually. So they should do well. Britannia has done well. They should do well. The numbers have come out well. Now, only reason why you need to lock in profits only when you feel that I'm happy with 25%. Then it's a different story. But there could be high probability that this 25% can become 50% also. So my answer, we have continued to hold this company in our model portfolio also. So my answer, should you book profit? The answer is no. And Best Agrofile financial trend was hosting still is going down and down. I think yes, you are right. Best Agrofile has been turned out to be a very poor mojo stock selection because we also realize that. But I think this also to do with more to do with the pesticide business also. Our sense is that if the demand for if the El Nino is going to happen, I think it's going to be I think market started also worrying about that the automatic demand for agrochemical would be a little low. So you're right, it's just numbers were good but did not reflect in the price. That happens sometimes, sir, but that's a part of life. In equity market, nothing is 100% sure. Nothing is 100% sure.
Okay, many of the investors have written in the chat box that there were a few bulk or block deals done actually today. That's why the number is very high and it sounds misleading.
Okay.
Okay, moving on to this next particular question. This is by Ajay. Dear Sunil, I've attended quite many of your webinars and the following advices are often repeated by you. Never try to time the market, and instead of adding small sums of money to the portfolio, it is better to accumulate and invest. How during many webinars, including the last 2 or 3, you've been informing that you have put money into stocks. This is contrary to what you've been preaching because putting more money in a falling market is akin to timing the market, and putting some amount daily also violates your suggestion to avoid SIP and invest by accumulating some bigger amount. Appears that you could be a victim of human emotions, although you vehemently advise the opposite.
So Ajay ji, first let me admit the last part of your side. Yes, I do suffer from the human emotions. And I have said many times, whenever there is a conflict between me and the Markets Mojo side, always go with Markets Mojo because I always, I'm a human being, sir. So I'll have emotions. मैं robot तो नहीं हूँ sir कि emotions नहीं होगा, hormones तो होगा, सही बात है आपकी. There are two things basically. I'm not trying to time the market. Okay, it's not that थोड़ी बहुत सैलरी आती है. If you remember last 2 दिन में मैंने पैसा डाला because कुछ सैलरी की इनकम आई तो मैंने डाल दी उसके ऊपर. इट वॉज नॉट आई एम ट्राइंग टू टाइम द मार्केट. मुझे मिल रहा था तो मैंने डाल दिया पैसा, मेरे पास पैसा था तो मैंने डाल दिया. नंबर 1. नंबर 2, I put, so I don't put a small amount. Whenever I take a position, I take a big position. I am not, see, what I suggested is SIP every month. Like someone had asked me, should I put SIP every month or every month? Someone also yesterday asked me 50,000 every month, which is I'm against it. I'm not doing a systematic investment. I'm not saying every month I'm going to put this money. What I'm doing is this: I have a liquidity. I have an amount with me. I'm invested that in the market. And when I invest substantial amount also. It's not that I'm going to invest 1% of my portfolio, 2% of my portfolio. I invest substantial amount of my portfolio in the equity market when I decide to invest that. So, but yes, having said that, yes, I do suffer from human emotions. You rightly said, and I'll always suffer from that. I must also tell you that, Ajay ji. Why? Because I'm a human being. तो वो तो होना ही वाला है, sir. And remember, no one is perfect in the world. I must also tell you, not all my prediction will go right. I would be happy if my 50% of my prediction goes right. Because of 50-50 ho gaya. The moment it goes below 50, I think then you should not take me seriously at all. Why? Because फिर तो फायदा क्या है? That's the thing. But I will not go 100% right also. I must also tell you that also, Ajay ji.
Okay, this question by Jayant. Hi Sunil, now that the cotton prices are down, what's your view on textile sector?
See, we need to also understand that textile is also a function of export, and merchandise exports are a little challenge as we are discussing about that. Cotton price also need to look at from the synthetic fiber, and if the crude price is little softened, that would have also impact on that. So, need to remain a little stock specific within the textile. Those who are more domestic focused with a different kind of a business profile. See, like one business I was looking at it very closely, you know, the traditional wear. क्या बोलते हैं उसको? Traditional wear ही बोलते हैं ना, कुर्ता पायजामा जो होता है उसको. Ethnic wear, sorry, that's the correct word, ethnic wear. And I seen a lot of competition happening, you know, like previously we only had Manyavar. And whenever in fact, even I had to attend marriage in my family, the only place where I visited was Manyavar to buy it. In Lower Parel, opposite Phoenix Market, Phoenix Mall, there's a huge store of a Manyavar, and I went and bought it from there. But now you do have a Raymond coming with ethnics or something. Aditya Birla has come out very good collection on ethnic wear. So I think that's competition. So I think we need to understand. Then there is in textile, you also undergarments business, where there was a lot of pent up demand because people were working from home. So at least were more in demand. That demand is over. People have moved more towards to the formal, and so on and so forth. So that's where. So I think you need to be very, very careful with what sub-segment we are looking at within the textile, because I personally believe the pent up demand is over. Don't expect pent-up demand. So it's more of a normal plain vanilla demand जो होने वाला है वो होने वाला है. And lower cotton price does not necessarily mean that these people will be able to retain that lower cotton prices. They may be forced to pass on. Why? Because the volume could be a challenge. So I don't think only reason for you to get into textile stock because cotton price decline, I'm not very sure that's the right strategy. And merchandise exports continues to remain a little sluggish as we speak for the textile players.
Okay, this next question by Shamim. Hi, sir, RCF is strong buy, but it's going down since 6 months. Can we accumulate now?
So, sir, yes, definitely RCF. See, remember, there's one factor which makes me little. I was making statement for Best Agro Life. Today it was, Shamim ji, I think today also is down, 1.72. And let me see what is the price. You are right, it's down this one. So, since there is little clarity as we speak about what's going to happen to the monsoon, I think this sector at this point in time do have a little uncertainty. So since you have not bought, even though our score is 80, it's not a mojo stock, but I must tell you that. Okay, I would suggest you to stay away at this point of time. Even though it's a buy, I would suggest you to stay away.
Okay, this question by Shyam Sundar: is it fair and rational to compare a concentrated portfolio of 10 to 15 stocks with an over-diversified index of 500 stocks?
No, with the stock, compared with what?
So I'm just flashing the question. Is it fair and rational to compare a concentrated portfolio of 10 to 15 stocks with an over-diversified index of 500 stocks irrespective of time periods?
So other option is that you look at Sensex or you look at Nifty. The returns would not vary too much between the diversified 500. Why? Because the 500 mein jo market indexes are computed based on the market cap, am I right? And top 30, top 50 companies will always command higher weightage in that 500 also. So the picture is not going to look very different. So okay, let me show you. But my screen is not visible because I think I made a mistake in terms of switching. But okay, let me take you 3 years ka returns of what we call. 1 minute. I think Jason.
These screens are visible, sir.
Visible? Oh, you were saying it was not visible.
Not visible.
Okay, visible. So let me show you. So if you look at this one, just can you show that?
No, it's not visible, sir. The screen.
It's not visible. Okay. Oh, Sensex is 54% 3 years, Nifty is 55.59, and BSE 500 is 59 point this one. So 3 saal mein the difference is only 3 percentage point between Nifty and BSE 500. So if you want, you can choose Nifty 50 or Sensex. The choice is yours, sir. But the returns, it's not going to change the picture. Color of the picture is not going to change too much.
Okay, this next question. This is by RB. Sunil bhai, please give your view on Coforge. The script, despite being a Mojo stock, has not performed to expectations.
You're right. I think on one day only the Coforge declined very substantially. It's a Mojo stock, and I think we do believe that IT as a sector should do well. And if IT as a sector should do well, I think this company should also do well. So my sense is that please continue to hold Coforge if you have bought it. No need to worry at all at this point of time.
Okay, this question by Dheeraj. Hello Sunil, what's your view on insurance companies? Initially it was a COVID impact, and now because of new IT regime. I had invested in HDFC Life 2 years back, but sitting with negative returns. Should I move to other sectors then still believe in insurance sector?
So Dheeraj, my personal opinion is that I think there are a lot of negative is already there in the price of HDFC Life. It was one of the worst performing company in February, if you remember that HDFC Life was, which I presented yesterday. So right now, risk reward does gives me a sense that it should do well. So please continue to hold HDFC Life. I think it should give you a good return. That's what my sense is. So please continue to hold.
Okay, Mr. Sunil, that's about the Q&A session for today.
So thanks a lot. I must tell you, the March numbers, you don't expect to such a great growth, single digit quarter on quarter in terms of net profit. Interest cost has started impacting the bottom line of a companies, and that's not a very happy. And if RBI is to continue hiking the rate of interest, things will become more and more painful for the India Inc. It will also mean that people, those who want to do capex, may start postponing that capex. So I would look at still December numbers as glass half full rather than half empty. So with this, thanks a lot everyone taking time out and attending this webinar. Thanks a lot, Jason, for hosting this webinar. Over to you.
Yeah, thanks a lot, Mr. Sunil, and thanks a lot everyone for coming for today's event. Tomorrow we do have a Mojo Infinity event for our investors. We'll be having the monthly performance review. And on the weekend, I'll also be coming with a second episode for the mutual funds knowledge series. Looking forward to seeing you all come for the events. Goodbye and have a great evening. Thank you so much.